Good morning, everyone. How's everybody doing? Everybody have a good weekend? Hello, Juan. Ayo, what's up? Hey, Johnny, what's going on? TB, old Cruz here. How are we doing? It's good to have you back with us, Johnny. Good stuff. Let's see what's going on here. We have, I put out the weekend update. Say hi back to Port Jeff. I miss my friends in Port Jeff. We'd be on the phone from market open to market close. They'd be getting people to buy stock, and I'd be selling it and doing the execution. So you talk to people for 8 hours a day, you miss them. So in the weekend report, I was looking for this 6807 level and for that to break 6749. Now the reason why I'm short biased, or I was short biased last night, because I didn't see the bid that I usually see after a liquidation. After we get a liquidation down, the next day you get a spring right back up. That didn't happen on Friday. And let's go take a look. So, and we have all of this inventory now that's trapped long above 68.90. And I think what's going on is there's a lot of bad news coming out about the software companies getting crushed by AI and all of that stuff. I've got some stocks that I'm looking at, and if you guys want me to look at something for you, let me know. We're going to be looking, at the CRMs and the DocuSigns and all those companies that are being threatened, just so you can monitor those in your portfolio. Um, we've got some overhang in the market. This is overhang. If you're not familiar with the term overhang, in the old days they used to call this overhanging supply. Now we just call it overhang. What that means is overhang means supply, and supply equals resistance. Okay? Now, normally this market, because of the ranges are so big, we do these big flushes and move back down. Now we've got some news that's come out over the weekend where they're talking about changes to the macroeconomic conditions of how these companies make money and how they're going to be affected. That is going to affect the investors and how they think long term. So let's see. I'm watching 68.07 and 3/4. Our overnight low is 68.10, so we're 3 points off that low. Let's see if we catch a bid and move back up. Overnight inventory is short. Now, I've left, this is yesterday's shortened session. This is Sunday night. This is Friday. So we use the references from Friday. We're still inside Friday's range. But I want you to notice that we are, hey Raj, good morning. We are here, right? 68.30. There's that sort of the excess of Friday. And you can see there's a lot of short covering here, right? And what it is this volume, this volume, this volume, and the overnight early volume are being collected down here. As Raj, you would love to call this the catcher's mitt. Now, the problem is Friday we did not get down to 67.88. I'm looking to see if we hold this bid and correct up in RTH, or if we take out that overnight low and come in and tickle 67.88. That's what I'm looking for, and it's because there is a seller, right? There are sellers at 68.24. There are sellers at in that 68.35 range here, right? There are sellers all the way up because inventory's trapped up there, right? So you guys don't know this because you trade retail. So when you sell a position, that's it. You're done. You're done. You're gone. The position is it's Casper the Ghost. You don't see it anymore, right? Dealers and size traders, they have inventory at different levels, okay? And when the market goes down, their inventories get full of product because they have to buy on the way down. So when we get up to certain levels, they're going to be selling again. That's why we look to the top of those candles on the way back, on the way down to see where the sellers are. And I'm going to show you evidence of that in just a second. So we've got kind of a weird looking B profile. We have a double distribution. We have single prints, which are right here. Now, single prints tell us that there are longs that are trapped above 68.34 in this distribution and in these single prints. So what does that mean in a practical manner? In a practical way, that means when you get up to that area, you could expect resistance, right? So if you were long at, say, 68.23 and the market starts creeping up to 34, you know that you better sell some of your product here because they're going to be competing sellers, right? And the practical part of trading is to be able to execute and make some money instead of having, these flights of fancy where, you're like, oh, I want this target, but what if that target doesn't materialize, right? So you got to be cognizant of that. You can't trade in a vacuum. You have to be aware of the climate that you're trading in. You have to be aware of what's going on, and it's very important. You can't mess around with that. If you do, it's not going to work out well for you, right? You're going to have unrealistic expectations. You have to have realistic expectations when you trade, okay? And one of the things about what we teach at Trading Syndicate is we teach you how to have realistic expectations given the conditions that you're trading in, right? It's like if you're out sailing and there's a big storm, you can't expect calm waters, right? You have to prepare for things, right? That's just reality, right? Thanks, Raj, about that ETF. Appreciate it, right? So what we do is we teach you how to have realistic expectations, how to use realistic risk management, so you're not always out there on the raw and ragged edge and then you're wondering why your trades don't work because they're not realistic business transactions, right? So we have to be realistic. We have to watch these things. It's important, and we just keep it simple, right? Make a little bit of money here, make a little bit of money there, right? And then have a nice day, right? Enjoy your life a little bit so you're not always upset and angry that your trades aren't working. So, what are we expecting here, right? Let's see what happens. London's going to open here in just about 15 minutes. Let's see what happens when London opens. And we get our usual inventory correction lower. Hey, little base hits add up, man. They totally add up, you know? People are always like, "Oh yeah, I want 30 points on a trade." That's great, right? Ambition is beautiful, right? Ambition is the lifeblood of our business, right? I'm not saying not be ambitious. I'm saying be realistic, because if you got a market that's got a 6-point range, how are you going to get a 30-point trade out of a 6-point range, right? You gotta, like, what do they say? Read the room, right? Read the room, right? So let's see. We've got inventory being collected here. That previous day low has not been traded at yet. Let's go take a look. Dig down a little bit. See, our overnight low is at 68.10. The previous day low is here at 8 3/4. Right? So we're just kind of sitting and we're waiting. That overnight POC was at 20. Now it's kind of moving up to 23. They're selling them where they can sell them, right? And you can see it's a very tight cost basis here, somewhere between 12, I'd say maybe 14 to 25. I'm trying to do my balance zones here. Right? Overnight inventory, remember, is short, so it's correcting higher, right? When overnight inventory is long, it corrects lower. Yet when it's short, it corrects higher. So what were the clues? The half-hour candles. The lows are getting higher on the half-hour candle. Now, J period took out that I low, corrected inventory. K could not take out J. That's an automatic long. Okay? And then you use your levels. I'm trying to see how well these levels are going to work, right? I'm going to go with this, then I'm going to double it to the upside, and we'll see how well these levels percolate through the day. I have to go set my VWAP too. If everyone's wondering where I set my VWAP, it's real simple. I set my VWAP at session VWAP, which is at 11 o'clock UK time, 6 p.m. in the Big Apple. So there you go. VWAP is set, right? Trading has been underneath VWAP now for hours, 6 hours, right? So now what we got to do? We got to take all this cheap crap that we bought down here and try and sell it as close to VWAP as we can. If you are long in this area, you know there are going to be sellers. There will be sellers here, right? Just at 28, right? There were sellers here. They lifted, came back up. So this is what we do when we first start. Now, I haven't traded since Friday, right? I don't even have my trading software open. Let's go open that up. Year 19 to 23. That's a good cost basis. That'll work. That'll work. That'll work. right? It's mine's a little bigger, Johnny. I'm a little, I'm kind of, I'm trying to get with the program this morning. Trying to zone in. I'm always distracted on Monday mornings or mornings after a long weekend. I always say I've got weekend brain. So what I do when I have weekend brain, it means I'm not really dialed in. I'll sit and do some watching and I'll go, "Oh, maybe this is going to happen." Now, if that happens, great, right? But if it doesn't happen, I'm like, "Ooh, JJ, you need to focus." Right? Uh, I'm using a bigger cost basis because the ranges, and I'm just because I don't want to get to 32 times, you know, you know. Yeah, so a lot of what I do, and I know it's really boring, is I watch, right? I've been watching markets since 1993, whether it's individual stocks or in this case the ES since 2012. See, I told you there'd be a seller up at 28 and change. So we poke our head above there, and all we're doing is now, what's going on, ladies and gentlemen, right? The position is underneath us. So now we got to take all this cheap crap and try and sell it a little higher and get some cash for it, right? So my buddy Buckwheat says cash. 1893? Sorry, 1993. Although sometimes it feels like I was born in 1893, AO. I'm old as dirt, man. uh, that's why I always say, when we used to ride horses to work, right? So there's your seller right there. Boom. So had you been long 20, 21, 22, take a little profit. I want you folks to pay yourself, okay? I'm going to tell you this, and it's not doom and gloom, but these markets are looking for direction. These markets are looking for leadership. And it's the beginning of the year, and there's a lot of uncertainty. So when there's uncertainty, you got to be careful, okay? And I want you to make money and take the money and put it away. I don't want you to take money and try and grow your account, try and double your profits. All of that stuff that's a fool's errand in this kind of market. It's a fool's game, right? When you make money every month, get it the hell out of your brokerage account before your ego gets its hands on it. Okay? Always, always take profits. Now, if you're a larger trader, right, and you have your system and all of that, that's great. I can help you manage your risk. One of my guys who's like a 5 grand a day trader, sometimes he does 50 grand a day, sometimes he does 25 grand a day. In my coaching class, I helped him reduce his risk, and I helped him in his capital preservation. He was losing. Sometimes he'd have a $20,000, $30,000 drawdown, right? And what I did was I helped him cut that out. So now he has maybe 1 or 2 losing days a month. right? And he gets to keep more of his money, and his stress level is much better. Especially as we get older, we got to watch our stress, you know? Look at that. Look at that. You see, when a market does this and it moves higher, you see the little gap in the candle? There was no order right there. Pretty cool. So the next sellers are going to be just up here. If you mark where the sellers are and the market just starts chewing right through those levels, it means that the sellers who are selling, who are long under 23, these guys have seen buyers and they're raising price, right? Because you'd be a fool. I mean, you'd be a fool not to, right? So you see those buyers coming in with cash in their hands, raise the price, baby. There we go. Right? If they're going to pay 27, let's see if they pay 28. Oh my God, they're paying 28. Let's go 29. They're paying 29. Right? And what large sellers do is they put product on the offer. And if those offers get taken, they just keep putting it out, putting it out, putting it out. Right? When the ducks are quacking, feed them. Right? The ducks are now quacking above 28. Feed them. Right? You got inventory at 23. Sell into that here. Right? Be smart. Don't be dumb and greedy in this market. My God, you're going to get punished. Take your profits, make your money. Right? Explain my stop loss strategy. Very simple. For example, I use a trade called the look below and fail. One of my trades, my go-to, right? It is my ride or die trade, right? The market goes from one level at the edge into another, right? So I go long, I put my stop here. Get it? So the business reason for the trade is that the sell orders under 68.15 are done. So I go long 16.17. My stop loss is right here. Because if somebody offers product underneath 15, 14, 13, 12, the inventory I own here is mispriced. If my inventory is mispriced, I must exit the trade because the trade does not make business sense. Every trade is a business transaction. If it does not make sense, I must exit and take my capital. Does that make sense? My stop loss is always structural. So if I'm long here, my stop is here. And then I sell some here, and I sell some here because I know they're going to be sellers. So say I buy 5 contracts, I sell 1, 2, 3, 4, 5. Let the market take me as I go out. This is how large traders trade, right? It makes structural sense. It makes business sense, right? So you're not, oh, 22RR, blah, 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 all that bullshit, right? If the business doesn't make any sense, if you own inventory at 16, you're trying to sell it at 17, 18, 19, 20, right? If somebody offers it at 14, your inventory is not priced properly, and you must exit the trade because you don't have unlimited capital, right? So you can't be offside 5, 10 grand in a trade, right? That does not make business sense for a retail trader. So when you come into our trading room at Trading Syndicate, every trade has to make business sense. Otherwise, you don't take the trade. Get it? Right? We are not buying fake Rolexes off of a crackhead in Times Square. Right? Right? We want good business, common sense trades. Right? You're banging them out with both hands, Johnny, as that market goes up. Look at this. So what happened here? Right? What happened? Right? Inventory is underneath us. The people who are short in this blue zone realized it here and went, oh crap, because what happens? The smart money shorts cover, wholesale builds a position, we come in and start buying, right? And then the dumb money shorts who shorted here, here, and added here This is where they realize, oh crap, we got to cover. When they go to cover, everybody who's got it just yanks the price higher. Right? That's why we get those bigger green candles. Now, there's going to be a seller at VWAP. If there's no seller at VWAP, I'll be very, very surprised. Right? You can see them front-running VWAP here at 31.5. Right? So how do markets move higher? It's because after the supply is absorbed by large wholesale traders, people who are short in a cost basis where the inventory is, if they're short in this cost basis when they go to cover, the people who are long yank price up. That's how business works. Right? Happens every time. Right? The sequence is always the same. Once you understand the sequence of the mechanics of the business, you're never going to be shorting in the hole again. You're never going to be buying the top. This is the cost basis. This is where your inventory is priced, right? And it usually happens after a liquidation. This is an accumulation cost basis. Now we're going to go, yeah, there's London, right? London's going to try and get lower. I'll be looking for bids at 26 because when we took that high, the shorts are trapped under 26. So if the market can get down to 26, it'll show us a bid. Right now, London couldn't even get down past 29, and it's having to push up. Let's see where they sell. Right? Let's see where they sell into it. Should be a seller at VWAP. Should be a seller right there. Watch. Where they sold, they will sell again. Right? It is the law of inventory. Boom, there's the seller. If they see bids, they will lift their offer, the red line. The best indicator that you have in your trading as a retail trader is the offer. That is a short covering candle if I ever saw one. They got them by the short and curlies. Looking for 39 3/4. Let's see. Let's go. Right? Going up to the close is going to correct inventory. What is the name of this pair? It's not a pair. On TradingView, my friend, this is called ES1 exclamation mark. Look at that. My pleasure, my pleasure. So what happens if we break the zone? Well, we double it again because cost basis, 2 times profit, and then you go 4 times. So it's 2, 4, 8, right? A monkey can do this, right? Draw the levels, I mean, not trade. Well, maybe a monkey can trade better than me this morning. I don't know. It's been a long weekend, right? If we accept, remember, what did I say? What do I always say? If we rip right through VWAP, somebody's short. Somebody's short and they're trying to cover, right? And Raj, what did I not do? I did not mark off the single prints. Bad JJ, right? So those are those single prints that we had, right? That's an area of supply. It's like a storeroom for contracts. And we ran out of supply, so we're going up into that storeroom to get the contracts. So inventory is now correcting up to the close of business of Friday. Right? Now let's see if we stay above 39 3/4 or do we look above and fail and backfill. Right? Backfill means you take a market up to create demand and then you go back and you fill in that demand with supply. So you never want to short the front end of the move. Let's see if the back end of the move happens. Right? How can you tell the front end and the back end of the move? Use the levels. Right? So our analysis is simple, right? Our analysis is based on what I like to say hillbilly math, right? And nothing against hillbillies. Some of my best friends are rednecks and hillbillies, right? But it's simple, common sense. If that offer is lifting, Do not short a market if the offer is lifting, unless you've got 20, 30, 50, $100 million and you can be offside 20, 30 grand for a few hours, right? If you're a retail trader, just leave it alone, wait for the offer to come lower. And the trade you'd look for if you wanted to short this is if it looks above 39 and 3/4 and fails and it starts offering under 39, you short it here and then you got a place to put your stop. Right? If you're a fast trader, sometimes you can hit that top of that candle short, but then put your bids in because somewhere down here, the shorts are going to come in and cover. You don't know where, right? Here we go. See, there's some bids at 39 and 3/4. Let me make this a little bigger. The most likely scenario, if the order flow permits, is to take this stuff and kind of go sideways here in a tight range and distribute. Think of this as the warehouse. Think of this as the store. This is the highway to the store, and now we distribute for profit. It's the same thing every time, my friends. It's the same thing every time. Nothing ever changes in this business. I left the green lines there where the stops are. So say you wanted to short this, right? So you're like, okay, I'm going to short, right? And I sell 39, 38 and 3/4, 39 and quarter. I'm just going to put my stop right here at the top of that candle here. Say 40 and a half, right? So when the next candle opens, right? Now where am I going to put my bids? Well, there's a bid there, and if the market starts offering above 39 and 3/4, I can scratch that trade and not really lose too much. You know what I mean? Right? Or I can reduce my risk with size. Now, when this next candle comes in, and if this next candle can't offer underneath 39 and 3/4, I know I'm cooked on the short, right? So you flatten the trade, right? You lose $5, $10 because you're playing with the micro, you're trading with the micro, right? Let's see if we hit it again, right? You might not get the best trade location, but sometimes you got to sacrifice trade location for certainty that there's a seller, right? This is starting to look like the backside of the move, right? But you can see that there are bids at 38 and 39. You can see the sellers up here, right? So if it's unclear, wait and let the offer show you. See how it offered up here at 40? Let's see if we get a print at 40 and a half. Right? So if you are shorting this, your risk is right here. Right? Now go put some bids in. So if you're short 39 and a half against 40 and a half, go bid 38 and a half and see if you get a print. If you can't buy one measly contract at 38 and a half, you know they don't need to sell under that level, and they're distributing right at the top of cost basis. See? Now let's see who comes into Walmart now, right? Let's see who comes into the store. Right? If that offer starts to lift, then you know, oh, this is risky. See, look, the offer is lifting, right? See, look how it lifted above that. You lost your seller. Your seller was here, the seller saw buyers, and they lifted price. Why would you be short 39 and a half? Now it's trading 42, right? You cover at 40, you take your lumps, right? And the market has told you, hey, buddy, it's not time. Simple. This way, right, you're not killing yourself, freaking out, adding to bad positions. Very simple, right? Did the trade work? No. Was my risk manageable? Yes, because I lost $10 as opposed to losing 100, right? So the first trades I take are using the micro to see if my brain is working and is matching up with the order flow. If it's not, why lose $100 when you can lose 10 to get the same information? See what I mean? You guys understand what I'm talking about? This is tactically intelligent. So when you do take a loss, it tells you, there's a bid at 38, 39. Don't short it down here. Wait until they run out of buyers and have to put it on sale. Right now, they put it for sale under 39 and 3/4. What did that do? That's like Black Friday. You open the door, they bum rush the security guard, knock that poor bastard over, and rush in to buy. Right? These are markets, my friends. These are practical things that you can think about because people have a very hard time visualizing because they've never traded size. Right? I have traded size my whole life. I've distributed at size and I've had to compete with other size sellers. So I know a little bit about selling competition. So when there's selling competition, price gets lowered. Walmart competes with Best Buy or whoever the hell else is there now. Target, right? They compete to get the customer. Remember, that's why we call it a market. It's not a hot tub, right? So right now we've got people willing to spend 40, 41, right? If they don't want to spend 41, we'll put it on sale underneath 41 and see if that attracts people. If that doesn't attract people, we'll move the offer down underneath 41 down to 40 and a half. So you watch this red line is the offer. The offer sets the price, right? The offer sets the price according to the order flow that's coming in. This is what retail traders don't realize because they've never been the offer. My whole life I was the offer. I sold billions of shares of stock into the US markets, right? For the people who did the deals, who have the lowest cost basis. You're buying a stock at $5. My clients paid 0.0001 cent for the stock, right? You're buying it at 5. So I can lower the price to 4, 3, 2, 1, and we're still making bank, right? Look at that. When the offer is lifting, you don't want to short it. There's supply at 43 and 3/4. If we run out, look at that. Now, what happened? All the people, if I was still short 39 and a half and 1,000 of us went to go cover, bada bing, bada boom, big green candle. Look at that. We went into the storeroom to get supply. There's a big set of single prints. So someone short. Big green candle on the way up after liquidation. These are short covering candles, my friends. Look at that. They are really short. They're short in cost basis, right? That's how this works. And it's the same every single time. Do you guys ever notice that when you wake up in the morning, good old CNBC will have markets in turmoil, markets in olive oil, markets in peanut oil. Everyone's freaking out and they just start dumping and next thing you know, the thing's 30, 40 points higher. Hey, Dano. Aloha, brother. How's paradise tonight? Did you work over the long weekend? Right. It's the same thing. Remember, overnight inventory was short, right? Overnight inventory was very short. It was probably about 85% short. All the time and volume was underneath the close. We did not take out the previous day low. So for now, markets are trading normally, right? The normal nighttime market, if there's a liquidation, they'll take that and try and sell it higher. If there's a move up, they'll try and catch some low-hanging fruit so the short sellers can cover. Nice and cold in the high 60s. I know. My aunt, every time it gets under 70 degrees, she's got like her down. She looks like she's climbing Everest, eh? It's like under 70 degrees and she's got like a toucan. All right, we got to sell her at 48. The levels are kind of working. Right. We're gonna backfill. We're probably gonna, if we backfill heavily, we'll come back to this little area here where there's a little bit of a position. Now let's see where the shorts come in and cover. Right? So you take a market up to create demand, you go back to fill in that demand with supply. Right? That's commerce. Right? That's how commerce works. Yeah, levels are working okay. Not bad for spitballing them this morning. Right? Not bad. The thing is, Johnny, the levels make me look smarter than I am. Right? The levels are not me. The levels are the market. The thing is, because of algo execution and electronic trading, right, the 0 and 1 mafia, the math guys, they have this thing clocked. That's the beautiful thing about electronic trading. The market will stop on a dime. Now, if it was a human trader, it'd probably go to 50, 51, and then come back down. But here, they'll step in and hammer that 48 bid, 47 and a half bid with no emotion, right? And then it'll come right back down because it's nighttime, so it's pretty mechanical. See how it's coming right back down here? Now let's see if that offer lifts or does it come back down to the 40-ish level here, right? See, old traders, they hate algorithms. I don't hate on algorithms because algorithms let us use much more tighter stops, right? And when we can use tighter stops, we can do business much more efficiently, right? We can, our risk is much more precise, right? We could use tighter stops. Tighter stops means smaller business expenses. So the market's coming back down to find where the buyers are. And if you're looking for a short, I'll be looking to see if we can get under 39 3/4 again. Right? Now, fast traders will short the top of that candle. There was a clue here, but I wasn't fast enough. And I'll freely admit that. Right? When you saw that candle and that candle unable to take it out, and that candle unable to take that one out, you could probably short 45, 46, put your stop up here at 48, and look for a 40 cover. Right? But I wasn't fast enough for that. Right? I still got some weekend brain, so now I'll look for the more simpler execution of the look above and fail of 39 3/4. Right? Because if we catch a bid here, I don't want to short it right here. I'll wait. Right? And if we short that 38, not the greatest trade location, right? Wait for the next candle, wait for it to come up, right? And if that next candle cannot get up to 39 3/4, then we can put on a little short, put some bids underneath, and see whether I might be early, right? I might get stopped out again. That's why I'm trading with the micro to see if my brain is working, right? There are going to be some bids at 35 because that's where we took that high, right? Now let's see this. Let's see who comes into the store here. Right? There's a little bit of a bid here. Let's see if the seller. There's our backup. Our backup is here if you're short. We need the seller to engage. That offer needs to come down, down, down. Right? If the offer doesn't come down, right? So if you're short, you should have your buy orders in already. If you're short 38, 38/4, right? Go put in a 37 bid, right? Now, see how it's lifting over there, right? So now you found the bid, right? So if you were short at 38 and you shorted some size, right, you might cut back some risk by taking back some contracts if it stays over that blue line, right? Let's make it white so everybody can see it, right? Watch the offer, because if that offer starts lifting, it's going to go up to 39 and 3/4, right? Let's see what happens on the next candle, right? We need now the seller to come in underneath 39, right? See? Right? I told you 39 and 3/4 to the tick, right? We're backfilling, right? We're going back to see whether or not those buyers, right, are still there. So now you know, right? Maybe this is a look below and fail of 39 and 3/4. Give it some time. Just don't flip to long right away. Wait for the next candle and see if we accept over 39 and 3/4. But you can easily screw yourself up by going long, going short, going long, going short. Sometimes, right, after what we're experiencing on the weekend in this order flow at 3 o'clock in the morning in New York, it's very difficult to get this right, right? Don't get upset if you get stopped out a couple of times, right? This is trading, right? We're going to make business decisions. Sometimes they don't all work, right? It's a very tricky market. Is it still called backfilling when the orders are based on short covering? Yes, right? Because the people who are long under 30, 23, under 31, they're selling to the people who are buying. The people who are buying are the people who are short. So that's where that bid is here. You see? Those are the people who shorted underneath VWAP, and they're buying here. If they see sellers, they will drop their bids back down to VWAP. But if they see that those sellers don't need to sell and lift the offer, they'll chase price higher. Temporary support is where the short covering bid is. You see, there's a few bids here. Now, we've got sellers here, right? So let's see if this price stability brings in buyers. If it does, the offer will lift above that white line. If it does not, and you're short, you probably want to try and cover 35. But if it doesn't, see how it's lifting? Right? There's a seller right there. See? There's your seller. But if those sellers see buyers, they will raise price because that's commerce. It's going to be a seller up at 41. Take advantage of it if you're long. See, look, it comes right to where I told you there's going to be sellers. Right? Now this sequence here, I'm sure there's a lot of people who went short, then long, and then short, then long, and they flip. If you find yourself flipping over, just stop trading for a second because that's how you blow up accounts, right? Just stop trading and watch. It's okay to miss trades. It's okay to be wrong. Don't be wrong and stubborn, and don't be wrong multiple times over and over and over again. Because after a 3-day weekend, the market really doesn't know what it's doing. And if you don't know what you're doing, it's like the blind leading the blind. It's not going to work. Let the large traders figure out some of these levels. That's how they pick your pocket, right? Let the large traders figure out some of these levels, right? and then take the trade, right? Don't be patient, be smart, right? Be smart, right? People hate being told to be patient. Everybody hates it. As soon as you tell someone to be patient, they're like, ugh, right? They don't want to be told to be patient. Just be smart, okay? It's because of YouTube, Dave. My YouTube's probably showing a little bit of a delay, brother. Apologies for that. See how it's going back and forth over this level? It's working out this level, folks. Right? Let the large traders deal with that. Right? It's like when you go to a friend, when you go to dinner with a buddy who's just made $100 million on a deal, and that dinner bill comes, you get alligator arms, you let him reach for the check. Okay? Let the large traders, right? Let them pay the way now. There's no reason for you to pay for this. Right? Take a couple of trades. If they don't work out, sit back and reassess. Right? Don't just keep trading and trading and trading. Right? That's why take your time to journal your trades. That'll stop you from over trading. Right? Be methodical. Right? See you, Johnny. Have a good one. Give my best to Port Jefferson and Miller Place. We're going to do some distribution here. Right? A little bit of distribution. Right? We're going to sell that product that we bought under 23, under 31. Exactly. Time to get rid of those stale donuts. Beautiful, Phil. Beautiful. Now right here, I don't see a trade. Right? This chop back and forth, the candles start getting smaller. Right? Candles start getting smaller. Business starts slowing down. No follow through. We know there's sellers at 39. We know there's sellers at 41. Right? There's some unfilled buy orders under 37 creating support, but the trade isn't clear. Right? So just chill out and wait for the next opportunity. It'll come. Right? And if you want to learn how to do this, folks, if you want to learn how to trade, if you want to learn how to do it intelligently, methodically, right, with good business, risk, smart execution models, right? If you're trading using an indicator or something like that, that's fine. Let's help you make that indicator make sense, right? Let's help you whatever your trading is, whether you don't know what you're doing or you do, we can enhance your business, right? We will enhance your business by helping you make good, intelligent business decisions, right? And we'll help you not lose money, right? Are you going to get stopped out? Of course, that's life, right? It's a business expense. It also gives you information, right? Your stops tell you what's going on, right? It's like having an informant going, no, 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 right? You gave me 20 bucks. I'm telling you, don't do this here. Wait. We'll help you with all of that, and we'll put together an intelligent business plan so you can profit, you can earn a living instead of trying to swing for the fences and getting hit with a baseball in the head every day. Gracias, Juan. Have a good one, brother. Thanks, everyone, for joining us. Come see us at tradingsyndicate.org. We are running, Steve's always running a sale here and there. I promise you for $19 you will learn more with us in a month than you will in 10 years anywhere else. And as usual, for traders who want to really level up their trading, I do offer one-on-one lifetime coaching where I work with you for as long as it takes for you to get profitable. No time limits, one-time fee, that's it. You know, for those of you who are serious, give me a message. I'm vwaptrader1 on X. This is tradingsyndicate.org. Thank you, everyone. Have a beautiful day. Be safe out there. And we will see you at 9 o'clock Eastern Time, 9 a.m. for the regular trading hour session. Thanks, everyone. Bye for now.